Now, Basel III has yet to be finalized. What's holding it back? How much progress have you made over the summer?
We have made a lot of progress when we started doing this reform agenda years ago. There's only one issue outstanding, which is the variability of risk-weighted assets. This is a big issue, and there only one issue is open, which is basically the output floor. Unfortunately, this is the most important issue still open, and the question really is, to what extent do internal models really work or not? We in Germany believe in internal models. We see the limits, but we also believe that if everybody works on a standardized model, we're not capturing the risk appropriately. So that's why we are working on this open issue, and we have made no progress over the summer because there was no forum where we really could discuss.
Why is it so difficult to come to a consensus when it comes to the output floor? We know that the chairman of the committee has come out to say that there are two camps. One, looking at a floor at 70%, the other at 75%. Why can't you come to a common ground, cut right in the middle at 72.5%? Why wouldn't that work?
Yep, that's a good question. But more importantly, the way the regulation is structured is that the constraining factor is the overall capital ratio. The second factor we are looking at is the leverage ratio. So the leverage ratio is supposed to control that the controls with the equity ratio is there. Now, the output floor never should be the constraining factor. In the case of an output floor of 75%, 50% of the banks will be constrained by the output floor. In the case of a 70% output floor, only a third of the banks will be constrained. So we have to make sure that we get the regulation right, that the CET1 ratios, the capital ratios, as well as the leverage floor are really constraining the banks and not the output floor, which was never meant to constrain the banks in the first place.
But negotiations have gone on for more than a year, and we have French policymakers, for instance, saying, you know what, we disagree with some aspects of it. And is there a possibility that a deal will not come through?
I have to say that from my point of view, from a German point of view, the Basel Committee is a very, very important international body. It has been a very successful standard-setting body over the past, and it's much more important to have this body work properly than not having it. So we think that we want to continue to have the Basel Committee as a well-functioning international standard setter. So it's important to very much try to reach an agreement. I am hopeful that we can do this before the end of this year. If we go into next year, my doubts would rise because just remember, we are working with end of 2015 numbers. If you go into 2018, I would think that we would need to do more quantitative analysis. So there's a pressure on concluding end of this year, and I think that maybe...
Why are you optimistic?
I am optimistic because if you look around the table at the Basel Committee, and the meeting will be... we're having another meeting of the Basel Committee tomorrow on Wednesday and 2 days from now on Thursday. And if you look around the table, everybody would like to agree, including myself. So negotiations will continue, and one of the places where this will continue will be the Basel Committee, but also the IMF fall meeting next week in Washington will be a good place where people will discuss about this.
Some say that could be an uneven playing field. Do you share that view? I mean, the U.S. already is thinking twice about whether or not they should adopt the same rules as the EU. In the financial industry, there's never a totally even level playing field, but the Basel standards are minimum standards for large banks. Each and every country can have higher standards. Look at, for example, Switzerland, which have always had higher standards because of the size of the financial sector to the Swiss economy. So what we are agreeing on is what is the minimum harmonized standard, and then each and every country can do gold plating above and beyond this minimum standard. So it's never meant to be a total level playing field, but at least you floor it at some point, and nobody will go below this floor. Do you see the Fed remaining committed to Basel, given that the Trump administration is rejecting multilateral trade agreements? Do you see the Trump administration at least accepting Basel III and remain committed?
Yes.
Why? because that's what they're saying, and I trust in my colleagues. The Fed has always been constructive in all of these discussions, and clearly they also see the benefit of having multilateral agreements over, let's say, bilateral agreements. There is a big benefit in not having regulatory arbitrage, and also don't forget, banks want to know what is the framework under which they are working. And regulatory uncertainty is a negative for the industry, so we have to make sure that we prevent regulatory arbitrage and also regulatory uncertainty.
Now, Dr. Dombret, I want to touch on Brexit. A hard Brexit is a real risk right now. What are your thoughts on it?
You know, the banks need to plan for a hard Brexit. Nobody knows whether we really have one or not, but this is an assumption which is the most likely assumption right now. And if you wait until the very last moment in a financial landscape which will change quite drastically, there are too many risks associated with that. So it would be our, as well as the Bank of England's, recommendation to start planning early on, because if every bank wants to go through the same narrow door at the very end of the process, this is going to be a problem.
What would be the impact of a hard Brexit? Because the UK is the single largest export market for the EU. There will be implications for the economy.
There will be implications for the economy, mainly on the British economy, but also on the rest of the EU economy. But the biggest changes I look at would be the changes in the financial sector. And the financial sector will be very different. It will also be a lot less productive and efficient than it is right now. So you will have changes to the business model of the financial sector. Banks will move, cities will, partially at least, with part of their business models. There will be new licensing processes. There will be new supervision. So it's going to be a big change to the way we do finance in Europe right now.
In terms of Brexit relocations, what's looking attractive? What are the alternative locations, in your view?
No, what I'm having lots of visitors who come to talk to me about that, and from what I get is the two cities most banks are concentrating on are Dublin and Frankfurt. There are other cities which also will get certain relocations, but the core of the international banks, which are repositioning part of their businesses, will go to Dublin and Frankfurt. So no one single city will get all the business. And more importantly, the risk will be shared amongst European cities, and that's just fine with me and makes a whole lot of sense.
The rest of the Eurozone economy is real as well. I mean, some people say growth is solid, but when you take a look at inflation, it's almost non-existent, very, very weak. What's your take on the Eurozone economy right now, and where is it headed? We
have had now 16 quarters of growth, subsequent quarters of growth in the Eurozone economy. We have.
Is it enough to say it is out of the woods?
It is out of the woods. It is. There are always risks on the downside. We have geopolitical risk. We have the risk of the Brexit, we just mentioned. We have other risks of potential protectionism and isolation coming. But where you really have problems putting numbers on those risks, there are always risks on the downside. But mainly, the Eurozone is in a stable, much better position after 16 quarters of growth. Employment is high. Unemployment has gone down. The investor sentiment as well as consumer sentiments are strong, which eventually will also transfer into the wages and into inflation. So the forecast for the inflation, for the CPI, for the consumer price inflation in the latest of 2019, where we will be close to our price stability target of 2% or below 2%, but close to 2%. And you may not even need all that 1.9% in order to move from a monetary policy point of view.
Would you be concerned about a strong euro? The euro rose against the USD for the first 9 months of the year, rising 14%. That will impact exports.
Whatever happens in the U.S. has an impact on each and every region in the world, including the Asian region, including the European region.
In terms of Germany's economy, how well is it doing?
We are reasonably strong. We have a broad-based growth. We grew 0.7% in the fourth quarter, 0.6% in the second quarter. In the third quarter, we will have good numbers, I can already tell you now. So we are also predicting a similar growth for next year and 2019. So Germany is growing above trend, which we put somewhere at around 1.25%. So we are closing the output gap as we go.
And the elections?
The elections will now, the outcome of the elections, we will have some time. It will take some time to form a new government coalition, but I don't see any harm to the productivity and the growth outlook for the German economy through that.